Every time you tap your card, a chain of events crosses the entire financial system and back again in under 2 seconds. Most people think the beep means it is done. That beep is actually closer to the beginning. Here's what really happens. The moment your card gets close to the terminal, something strange happens. Your card has no battery. It is completely dead in your wallet, but the terminal is constantly broadcasting a radio signal. And when your card gets within about 4 centimeters, a tiny antenna inside the chip picks up that signal and uses its energy to power on. This is near-field communication. The terminal is literally supplying the electricity your card needs to wake up and talk back. Once powered, the chip and the terminal authenticate each other using the EMV standard, a protocol built by Europay, MasterCard, and Visa. Your card proves it is genuine by generating something called a cryptogram. This is a unique code, created using encryption keys stored on the chip, that is different for every single transaction. Even if someone intercepted the data, the cryptogram cannot be reused. It works once and only once. Now, here's where a common myth comes in. You might have heard that your card number never leaves the chip. That is true for mobile wallets. When you pay with Apple Pay or Google Pay, your real card number is replaced with a substitute called a token. But when you tap a physical card, your actual card number does travel through the system. The cryptogram is what protects it. If anyone captures that number mid-transaction, they still cannot use it without the one-time cryptogram that only your chip can generate. The terminal now has everything it needs: your card number, the cryptogram, the amount, and the merchant's details. It packages this into a message and sends it to the acquirer. The acquirer is a financial company that has a contract with the merchant to process their card payments. Companies like WorldPay, Adyen, or a division of a major bank sit on this side. Some acquirers also handle the technical processing. Others work with a separate payment processor. Either way, the acquirer's job is to take the transaction and pass it to the card network. The card network is Visa, MasterCard, or whoever issued the card's brand. And here is something most people get wrong. Visa does not lend you money. Visa does not hold your balance. Visa is infrastructure. It is a network that connects thousands of banks and financial institutions around the world. When the acquirer sends the transaction, the card network looks at your card number and routes the request to exactly the right place, your bank. Your bank is called the issuing bank because it issued the card to you. This is where the real decision happens. Your bank checks your balance or available credit. It runs fraud detection. Does this purchase match your patterns? Is the location suspicious? Is the amount unusual? In a fraction of a second, it sends back a response code, approved or declined. Along with that response, it places a hold on the authorized amount in your account. That response now travels back through the same chain: issuing bank to card network to acquirer, acquirer to the terminal. The terminal beeps. You pick up your coffee. Total time, typically under 2 seconds. But your money has not actually moved. What just happened was authorization. The merchant has a promise that they will get paid, but the actual transfer happens later in a separate process called settlement. At the end of each business day, the merchant's acquirer collects all the authorized transactions into a batch and submits them to the card networks. The card networks then coordinate with each issuing bank to move the real money. This settlement process takes 1 to 3 business days. And when the money finally moves, everyone takes a cut. The issuing bank takes the largest piece, called the interchange fee. In Europe, this is capped by regulation at 0.3% for credit cards and 0.2% for debit cards. In the United States, there is no cap, and the average is closer to 2%. The card network charges its own smaller fee. The acquirer adds its markup on top. On a €4 coffee, these fees might total 5 to 10 cents, split between 3 or 4 companies. So the next time you hear that beep, here is what actually happened. Your card, powered on using the terminal's own radio signal, generated a one-time cryptogram to prove it is real, sent your card details through an acquirer and a card network to your bank, got a yes or no answer, and sent it all the way back, all in less time than it took you to put your card away. And the money? That comes later.